Well, hello everyone. Welcome to a new trading week in the market. Some of you may wonder why I'm smiling because we have a lot of bullish trades on in our trading a smaller account, and the markets have started the day off pulling back substantially in the futures market, and all of the major indices opened down today. And so we're going to go out and we're going to take a look at what the markets are doing. We're going to take a look at what to do, when you live in a shoe and people keep stepping on you. And, by that, I mean, we're going to look for opportunities in the midst of what may seem like, a lot of rubble. We're going to play some example trades. We're going to look at managing some of the trades that we're on. And the one thing that we are not going to do is stick our heads in the sand, right? Which is really tempting to do on a day like today, to just manage it by closing your laptop and going skiing. It's a beautiful day here in Utah, so that might have been my temptation if I wasn't meeting with all of you, or to go golfing or to go for a walk or to clean out your closets, whatever that might be. We're going to, take the bull or the bear, by the ears, and we are going to move forward. So this is trading a smaller account. In the trading a smaller account class, we started the year with $25,000, and that account has been hit a little. So, all I can say is we started off 2024 in much the same manner. The market had a bit of a pullback, and then we ended up having the best year in this account, life to date. And it is an example trading account. It is paper money, but we just kept on plugging. If you are not following Mike Fairborn and I on X, we encourage you to do so. Consider this your formal invitation. My handle, Barb Armstrong CS, and Mike's handle, Mike Fairborn CS. Keep in mind that we do trade options in this class. Options carry a high level of risk and aren't suitable for all investors. We use the paper money software application on the Thinkorswim desktop platform, and it's a brilliant place to learn, to become familiar with your trading strategies and all of that good stuff. I'm seeing that there's some buffering happening in, I'm getting messages in the chat on that. And I know that our tech team is working behind the scenes to resolve that. So just be patient. Okay. And hopefully we'll have that sorted out in a minute or two. Okay. Know that one of the differences between paper money and a live account is that short options will never be assigned early in paper money. That can happen in a live account. Okay, I want to thank and welcome the almost 300 of you that are here joining us live today, and to the many who have, they show up 10, 15, you guys show up 20 minutes early, you're kibitzing in the chat, you're trading ideas, and bits of information you have picked up on trading and on what's going on in the markets along the way. So I want to thank you guys for that. So hello to, Tufone and Carol and Ben and Ray and Frank and Kevin and Regina and Edward and the rest of the gang, AP 514, TM, the usual suspects, as I like to call you guys. If you are joining us for the very first time, feel free to type a greeting into the chat. And I know that we still have some buffering going on. We're working on it. Okay. So just give it about 20 seconds and it should be better. Like I mentioned, we started with 25,000. Our max position size, if we're buying a stock, is 5,000, which represents 20% of our starting account value. But you know what? Would we do that if we had $1 million account, have a $200,000 position? That would likely not be our position sizing strategy. So sometimes when you have a smaller account, especially in the beginning, these positions seem a little heftier, and our max trade risk is $500, which is 2%. And again, I have an account where on Thursdays, we started with $1 million. And our max risk per trade is 1/3 of 1%. And our max position size is more like 5% as opposed to 20%. So, you have to go with rules that you are comfortable with. We focus on short to intermediate time frames. So what we're going to do today, I have, a couple of quick announcements. We're going to go out, we're going to look at what's going on in the markets, and then we're going to do some trade management, look at, managing the damage, so to speak. And then we're going to spend the rest of the time on placing some new example trades. So the one announcement that I wanted to share, and if you have not gone to schwab.com/coaching, if you come to this page and then come to in-person events, if you have never been to an in-person event, you may want to check it out. This coming weekend we'll be in Seattle, and then the following weekend we'll be in Atlanta. And both of these are technical analysis and options workshops. Friday we spend, this one is Thursday and Friday. So Thursday's technical analysis, or the first day is technical analysis. Second day is option strategies. I will be at the event in Atlanta. And so I'm excited about that. If any of you would like to, are planning on being at that event, please come up and introduce yourself. We'll then be in Scottsdale for a 2-day workshop, and following that in Chicago. I will be in Chicago for the advanced options strategy workshop. You can now register. Registration just opened for that. But these classes fill quickly. So if you want to go register, you can always cancel your registration. They are free to attend. And, you just have to get yourself there. Okay. So that's my little plug for that. Let's come out now and have a look at what's going on in the markets. And we'll start with the S&P. So the S&P is down 1.7%. Is still, this is a 1-year chart, so a pretty significant uptrend. But there was news that there is a company in China that can now produce some products that are competitive in the tech space, specifically hitting NVIDIA. We can see that NVIDIA, had a huge fall today, down 15%, and it's in reaction to that news. And of course, this is such a heavy hitter when we come and we look at, say, the NASDAQ. NVIDIA is a pretty big hitter, and some of these other tech stocks, AVGO down today, AMAT. Tech is half the sector, or almost half of this, NASDAQ 100 index, and a lot of these stocks getting hit. But it's not a sea of red. It's just that you have some heavy hitters on this index, and the same with the S&P 500. NVIDIA is a big player, and and AVGO isn't exactly tiny either. Now, Apple, which, of the Magnificent Seven, has been, the one kind of dragging, that group down. It's up today, so go figure. Okay. But, so the S&P 500 down 1.7%, NASDAQ down 3%. And it was kind of, pulling back through the month of December when Santa decided not to do the rally again this year. And then it broke out to the upside, came within a stone's throw of an all-time high. And today, gapped down on the open and then appears to be trying to rally. So this could be just a knee-jerk reaction to this news, or it could be the beginning of a more significant pullback. We won't know until it happens. The Russell, continuing on its path, setting up this kind of big pennant pattern, and this diagonal resistance line still acting as resistance, but this one down less than 1%. So less impacted by this international news than the others. And the Dow is actually up today. What do you know? Not up by a lot, but, actually it's now saying it's down. It's down, it's up, but, this one too, like the others, opened down and then has rallied. it's currently down 1 penny from Friday's close. Okay. And then what do you expect is happening with the VIX? Well, it's up pretty substantially, hit a high of, I think, 22 and change today, 22.50. And so might this be a good day to sell? Yeah. Yeah. Like someone said, like a lot of AI related stocks, are being hit. Now, to do a little bit of trade management here, we've talked a lot about this trade we put on, I believe it was Nike. We did a short call vertical and we sold the 72 and then we bought the 74 to define our risk. So here we could be, at risk, in this scenario. Our goal here was for this to stay below 74. And so it rallied for a couple of days, pulled back on Friday, and we said we'd see what it did. And wouldn't you know, like so many stocks in the market are down, and this one, which we wanted to continue to fall, is going up. And so this is starting to look like a trend reversal. And so when we come to this, we could say, well, we don't want to deal with the risk of being assigned, even though that's a theoretical risk in this scenario. We are down $277.50. We're at 157. And so at call it 160, what would be our max loss is if it got to $2. So we could still lose another $150 on this. We have 11 days to go. It's not going in the right direction. So we are going to come out here to Nike and we're going to cancel and replace this order. And instead of buying it back for the 13 cents we were hoping for, we're going to buy it back for $1.56, hopefully. They're saying it ranges between $1.56 and $1.58. Let's make it, or $1.68. So we're going to put that in our short call vertical group. And that's locking in a loss, but it's also hopefully preventing an even larger loss. Okay. And what I find interesting is that, when I first started trading these, I thought, well, if it's through both strikes, like, because our second strike was at 74. If it's through both strikes, don't I have the max loss? But there is still time value in these options. And so even though we have exited this trade for a loss and it was through both strikes, it wasn't a max loss. And that kind of blew my mind when I realized that, because I thought, well, if it's gone through both strikes, I've got the max loss. I have nothing more to lose. So I may as well just, then start, hoping, which I say is a 4-letter word, hoping that it's going to pull back. Okay. Okay. We also bought a stock position on EK. And one of the questions I had, because I go back and read the chat at the end of every class, and there were a ton of questions that we weren't able to get answered. So on this one, I just want to take a few minutes because I think this is really important, and then we'll go back in time. So we're going to go back in time. And so I'm going to bring up a 1-year chart. And so I spent, a bunch of time, and I'm just going to move this over a little bit. Sorry. Activate. So, I spent some time on Friday going back and saying, had we looked at Bank of New York Mellon, 9 months, back here and bought, I guess I have to go back to a year. Let's say we came back and we bought the stock on this day. So our first stop might have been here. we might have said, hey, here was the recent low at 52.64. We're going to put our stop 3% below that. And then, this is just an example. Let me change this. Axis or price axis. Make that a 0. Okay. So we buy on this day, our stop is here. And if we had said, well, our guideline is going to be, if it closes below the 30-day moving average, we'll move our stop up to 3% below that, the low on that day. So on this day here, on May 1st, we would have adjusted our stop to 54.93. And so what we're attempting to do here is take some of our risk off the table. And with a stop loss order, there's never a guarantee that you're going to get out at the price asked. And then it turned out the stock rallied and continued to go up. And the next time it kind of closed below was actually June 13th. So on June 13th, we had this red arrow, and you may be saying like, hey, how do you get this red arrow thing that you're talking about on your chart? Well, if you come to studies, you can add that to any moving average. So you can see here it says simple moving average, close 30, 0, yes, and the other ones say no. Well, if you come to your sprocket, you're just saying show a breakout signal. So it'll give you a red arrow if it crosses below and closes below the 30-day, and then a green arrow if it crosses and closes above. So that's what I did. Okay, so then on June, we would have moved our stop up again to 55.97 from the original stop of 51.06. So now, and what price did we get in at? Well, let's say we got in on the closing price this day of, say, 57.16. Okay. So if we got in on that price, we've now moved our stop up to 55.97. We're not protecting any profit yet, but we're trying to minimize our stop, minimize our potential losses. And here was the day we bought. Well, so then the stock rallies and it continues to go up. And then it closes below here on August 5th. So now we move the stop up to 3% below the low on that day. So now we would have been out at 50, our stop is at 59.10. So now that's above our entry price and we're trying to protect our profit. That's now our goal is, to give it some room to breathe, because we're in this because our expectation is that it's going to continue to go to the upside. Okay, so then, do we get stopped out? No, it continues to go up. Now, some might have adjusted the stop here when it came and kissed it, because our stop is still way down here and it's now trading, at 76.33. And some might say, hey, unless it crosses the 30-day moving average, I'm just going to let it go. So here we would have adjusted our stop to 76.19, and 3 days later we would have been stopped out at close to the low of the day. And so this is, if I come back to the 1-year chart, activate. I guess I shouldn't have moved it. So here we bought at 57.16 back here in April, and we adjusted our stop along the way according to a set of rules. And I'll put this example trading plan. I will create one in the next week or two and put it in the trade management mini sessions trading plan section. But how did we do? Well, we ended up making $19 a share for a return on our risk of 33%. Now, you might say, well, that actually, that's a nice return for a stock investment in under a year. But, it kind of went sideways for a bit, and then it gapped up on earnings. And like, when do we get back in? Well, you might say, well, my simple rule is I get back in when it stopped falling. Well, when it was going sideways, how do you define stop falling? Well, you may say, I define stop falling as when it crosses back above the 30-day moving average. And, this, it gapped up on earnings. So you might have then put in a conditional order and said, hey, if it keeps going up, then, get me in. So, we might have had we bought this back in April of last year, bought it back here, maybe on January 16th. Instead, we looked at it, said, hey, it's broken above this previous high. We bought it Friday. And so we will now, continue to apply, this set of rules to a trend, if we consider this to be, a stock that we bought because it's trending. We also bought it because, we come to the trade tab, it also pays a dividend, and it's considered a value stock. And, we don't need dividends. There's no guarantee in a live account that it will continue to pay a dividend. Actually, we don't get paid dividends in our paper money account, but we haven't actually ever talked about this in our trading a smaller account class. Now, there is a class called Getting Started with Stock Investing. And so Kevin Horner might share with you, a similar plan to this or a totally different plan. But this is an example of a trading plan. And had we not sold, would we still be in the trade now? We could have been. And what did it cost us? Well, we got out here for, 57.16, and we bought back in, we got out at 76, and, we bought back in at a higher price, but we weren't already in and watching this stock. So anyway, that's that. But I got asked a question on that. And so I wanted to answer it, and I put together a little scenario. Okay. Let's go and look at something new. So let us look at, I didn't write the ticker symbol down. Dang it. Okay, I think I was, oh, for crying out loud. This is the first time, may have been, was it? No, what? Oh, look at AVGO today. Oh, down 17%. Wow, that is just some kind of painful, isn't it? Oh, Copart. Oh, I can't believe it that I didn't write that down. Okay, let's look at Triple M. I'll figure out which stock it was and we'll come back to it. So 3M, has obviously been uptrending. If we look at the last year, well, here's 9 months. We've gone from 91 to 152. And, like many stocks will sometimes do, it kind of had this period of consolidation. And then it gapped up on this earnings, kind of pulled back down after this earnings back in the fall, and then gapped up here on January 21st, and then has continued to move to the upside. So could we look at this stock and say, well, I'm not sure what this company might do longer term, but this is a company that has an extraordinary number of patents. And could we do a 1 ATR trade on this? And so if we come and we look at this and we say, well, and we have an example 1 ATR trading plan, and it says, does this stock trade 1 million shares a day or more? Check. If we come out to, February 25th, now our expectation is that we might only be in this trade for 3 to 5 days. So this is kind of out on a skinny branch. We want at least 3 weeks plus the amount of time we're going to be in this trade. But if we looked at this and we said, okay, does it have at least 20 times the number of contracts we're going to trade? Yeah. Almost 10,000 contracts on the 150 strike. If we look at the 155 strike, 1,800 contracts. Is there a tight bid-ask spread? 10 cents? We're saying if it's under 30, or 10%, we'd be good. So we're good there. Yeah. And so the next question is, what might our targets be? And so with this, we're going to do an example of a 1 ATR, and that is triple M. And the 1 ATR on this stock is about 307. So it's 307. This is the amount the stock moves in an average day from top to bottom. And then our target is going to be based on today's high, and today's high is 152. And then to that, we're going to add $3.07. And so that would be 155.07 would be our target. And then our exit would be today's low, which is 148.90. And we can see that just by hovering over today's candle. We're going to subtract 307. And that's going to be 145.83. And so to put that in, we're going to come to the trade tab. Now, if we look at this at the money strike, we've got 25 days. We're risking $300. So we're only going to do one of these. So we're going to buy a single, and then we're going to make this first trigger sequence. We're going to right click, create an opposite order, and we're going to make this a market order that is good till canceled. And we're going to say, hey, if and or when triple M, and there's no guarantee that this will happen or happen within the time frame we've allocated for it. We want to get out at 155.07. If it goes against us and goes below 145.83, we want out. Hit the save, confirm and send. Does it have 155.07? Check. Does it have at or below 145.83? Check. Does that make sense? It's currently trading at 149.80. So we're above and below. Check and check. And we're going to put this in as a long call. And this is a 1 ATR target. Now, no guarantee if it gaps up or down, and we've seen probably a fair bit of that today, right? Yeah, and this is kind of skinny. So we could have done this time frame, or we could have even gone out to a weekly time frame if we have, lots of volume. On these weeklies, we do not. But if we came out to the March monthly, we'd have, lots of volume, and it would give us much more time. Okay. So there is triple M. Okay. We had another long call long call on Autodesk. And I just want to kind of zone in and look at this. We had a stock position with a swing target. We're still in that. We also had a long call with a 1 ATR target. And we put the trade on the 22nd. And then we adjusted the stop according to our plan to $1 below the low the next day. And then what happened? It gapped down, triggered our stop, and we ended up out of that trade today. And that's when your petunias can get a little frosted, because we ended up closing Autodesk. We were out at 320. It was the February 21st, 310 call. And then the darn thing rallies, and we wouldn't have been out at all. So if we look at that now, the trade tab for the February 21st, 310, it's now back up to 430 to 480, and we got stopped out for 3 and change. So if we come to the monitor tab, our account statement, and we look at Autodesk, we bought for 435. We were stopped out at 320. But, you know, if this stock had kept falling, could we have lost more? And are there times when, you know, our petunias get frosted or, you know, there's some gnashing of teeth involved? Yes. And so if I just take 320 and subtract it from 435, I've already done the math. That was 115. So we ended up with a loss of 115. Now, did we blow up the account? No. We lost $115. Which, you know what, does not make us happy. However, it was a successful trade in that we followed our rules. Okay. Because today we were going to adjust our stop again, you know, and so we were following our rules. So we had that loss of 115 on an investment of 320. And so that represented a 26% loss. Now, could we have afforded to take, you know, the $320 hit? Yes, we could have, but just because we can doesn't mean we want to. And so although this wasn't what we were, what we were planning on, I considered this a successful trade in that we followed our rules. The problem was it just didn't make money this time. And there was a bit of gnashing of teeth in that it came down and triggered our stop and then rallied. Now we still have the other position on Autodesk where we bought 15 shares. We're up just a smidge, $8.55. And our target isn't the same on that. We looked at, I think, this previous high, and we said, we're going to trade this back up to the previous high. And so we'll just see how we make out with that. Okay. So that was Autodesk. Okay. eBay. I do want to show you because we do have one other trade on a long call. So let me close some of these so we can just. So we do have a trade on eBay. We are up $42 or 8%. This was a 1 ATR trade. I think we also have a stock position on this. But with a 1 ATR trade, we adjust the stops daily until it hits our target or until we end up out of the trade. And so if we look at this as of Friday, the low was 64.42. The stop is currently sitting at 63.41. So we would take this 64.42 and subtract 50 cents, which would give us 63.92. So we're just moving the stop up by 50 cents. But as part of our discipline, we're going to do that. So this just, adjusts it on the chart. But we're going to come to the monitor tab. We're going to come to eBay, and we can see here's our call. We also have a stock position, but we're going to right click, cancel and replace. We're going to come to our sprocket to bring up the conditional order, and we're changing this to 63.92. We're going to hit enter, 63.92, save, confirm and send. That's our long call. So adjusted 1 ATR, our exit. And again, as many of us have seen today, that sometimes stocks get triggered and it's not at the price we want. Now, what's our low today? Our low today is 64.30. Our low on Friday was 64.42. So because this is a lower low, at the end of today, we wouldn't adjust our stop down. We would only move the stop up. So we kind of have a buy today. So tomorrow we won't have to adjust the stop. It'll either keep on going and we'll adjust it, or it will hit our target on Tuesday. And then Wednesday in trading breakout patterns, we'll look at this again and do another adjustment. I do teach it's actually trading price patterns. Yeah, so any adjustment on the limit side. So we're not adjusting our target, although if it gets, like if it got up here, say to 67, 35, and just as an example, and then we had this doji pattern or something that might indicate that this move to the upside might be ending, we might say, hey, this is close enough, and choose to exit then. But as a daily management part of the process, we are not changing our target. So we've looked at Nike, we've looked at eBay, we've placed a new trade on 3M. Okay. Now, when we look at the sectors, we come to S&P 500. So, and we look at who's doing well today. Well, tech is tanking. They're in last place. But healthcare, consumer staples, financials are still strong. So you might say, well, maybe we want to look at some stocks in the financial sector or the real estate sector. Energy is, it's up. It's now pulling back, actually. It was funny because it was looking, a little more robust earlier today, but it's now falling. But healthcare having a pretty awesome day. Staples is having a good day. Does this mean this is going to continue? Well, financials, if you look at, they're not only having a good day today, but they've been in the top 3 for the last month and in the top 3 for the last 3 months. And so could we create a watch list? Paul, are you saying you reached out to me on YouTube? Like, did you put a comment in something in a webcast? Because if you did, I have looked at most of those today. I think I have one that I haven't commented on. So let me know which webcast to go back and look at. AJ is saying, can we change the price target for one ATR if the stock is getting stronger, even though that's not part of your trading plan? You can do whatever you want. This is your set of rules, but I kind of operate on that. Like, don't be a greedy guts. Like, if that was your target, take it. And then you can always wait for the next setup and place the next example trade. So you could do that. But again, you can trade any way that you like. My strategy here is have a plan and follow the plan. And we talked about that on Friday, how when you have a plan is an antidote to those pesky emotions, hope, fear, and FOMO. And someone said some more positive 4-letter words in the world of trading are plan and exit. I guess target isn't exactly a 4-letter word, but maybe you could do a short form for it. And that was one of the things I had on my list from the comments. And there we go. Oh, let's look at Lulu today. We had a short put vertical on Lulu, and somebody said, why didn't you take the 70% given we were coming into the weekend? And the reason that we didn't take the 70% is that on the weekend, this is a short vertical, which means we've sold something. And with a short put vertical, it's time decay that we're looking for, the benefit of time decay. And on Saturday and Sunday, time decay is chipping away at the value of the option. Now, let's see where we are on that. Because I expected we would be, so where did Lulu go? Maybe it ended up hitting our target. Let's see. Maybe it ended up hitting it on Friday. Lulu. Oh, we ended up out. It must have been on Friday. So it did end up hitting our target by the end of the day. And so we had placed this trade on the 17th, and we didn't close it out in class because we wanted to let time decay do its thing over the weekend. And then it looked like, just before the close, it ended up out around 1:30, and this is Mountain Time. And so on this one, and here's a little, ray of sunlight in, a down day for a lot of stocks. If we take our 175 and we subtract 34, we ended up making $1.41 per share on that trade. We did one contract because how much were we risking? We were risking $325 or $3.25 a share. So what was our return on risk? 141 divided by 325. That was a 43.3% return on our risk. And so, that's one of the ones that, it went according to plan. We got, unlike Nike that we had to buy back on the short call vertical side for a loss, this one did exactly what we were expecting it to do. And so that one had a happy ending. Gina, you can call the trade desk on that. Somebody's asking, is there a way to not have to log out? And there is, and it depends on what kind of platform you're using, whether you're on a Mac versus a PC, but you can do that. So there's Lulu, and we're now out of Lulu, but could we sell another one? Could we do a wash, rinse, repeat? So, and where might we want our strike to be? Well, I still see this as a support level, and it's still moving up. We're likely to get less premium if we were to sell it today. We might rather wait for it to kind of pull back a bit. So if we come and we look at this and say, if we were to come out 25 days, like we have 20 strikes, and that isn't even enough. So, and I'm just going to show you this by way of, and our bid-ask spread on this, because of the volatility in the market today, that's pretty darn wide. And so we said we don't want it to be more than 10%. It's way more than 10%. And so we would look at that and say, well, if it pulls back here closer to the 370, we could look at that again. But are we bullish enough to then do a long call vertical? Some might say yes. Some might say, well, we don't really have an entry. Okay. Yeah. Is it breaking past resistance? Well, I would draw a resistance line kind of right along here. So it's kind of peeking its head out. But is this a real breakout, or could it be a fake out? So with Lulu, we are going to put that on our watch list, and we'll come back and look at that Wednesday. I'm going to make a list. So we're going to look at that Wednesday. Okay, so my friends, our time has come and gone. Lawrence, I like the way you're looking at it. It's kind of at that resistance level, but we've got, some might say, could this be, a double top? And it could be, but could it be a double bottom? It could be. And how do we answer that question? Well, we see it if it breaks out above resistance, or if it comes down and breaks out below support. And that would be our confirmation, because right now it is in a channel. But, so you could say, well, could you do an iron condor? But what if it breaks out? I'd want to see it roll over and start heading back down before I put that short call vertical on. Okay, so guys, if you please hit the like button, it helps move things up in the algorithms for us. It also lets Mike and I know you found this valuable. So if you could do that, that would be much appreciated. 2, if you haven't subscribed to the channel, you're going to want to do that. It's free to do that. You might want to consider attending a live event especially if there's one in a town within driving distance of you. I used to get in a plane and fly places if I needed, when I was a client, prior to becoming a coach. I loved going to those in-person events. And then don't forget to join us on X, Barb Armstrong CS and Mike Fairborn CS. I don't believe there was a survey today, so you are off the hook for that. But thank you so much for joining us. Have an awesome day. And stay tuned for the next webcast coming up. I'll look forward to seeing you then. I do believe it is Mr. James Boyd, and that is one you won't want to miss. Take care, everyone. Have an awesome day.